The Reserve Bank of India's decision to cut down the interest rate is being widely hailed by the economists across. Hailing the central bank's move, economist Akash Jindal spoke exclusively to NNIS. RBI governor in a surprise move slashed the repo rate by 25 bps to 7.75% with immediate effect. The repo rate was at 8% since past 1 year. Even the sentiments in the stock market was quite positive today as the Sensex ended 728 points higher at 28,075, its biggest gain in absolute terms in over 5 years. Jindal said that the much required reduction in the repo rate is a well-deserved gift at the Lohri and Makar Sankranti from the RBI.
I think it was a much required move. We were expecting a Diwali gift from RBI. We were expecting a New Year gift from RBI. The gift didn't come at the time of Diwali or New Year, but at the time of Makar Sankranti and Lodi, we have got a well-deserved gift from RBI. The cut in interest rate means a lot for the economy, because what would happen is, in case banks also pass on the interest rate cut to the consumer, then the benefits would be, first, industry would get money at cheaper rates. Industry's interest costs would get reduced. What it means is that corporate sector and industry, their profits would be higher. So stock market would be positively impacted, and we have already seen today's stock market go high because of that. And in case the corporate sector gets high profits, there would be possibility for salary increases, there would be more job openings.
Lauding the decision, Finance Minister Arun Jaitley said that it is positive for the Indian economy and will certainly help in reviving the investment cycle the government is trying to restore. He further added that the move will result in more money with the consumers. Sharing similar view, economist Jindal said that the benefit would pass on to the common man as well.
Now, coming on to the common man is also going to benefit, because there is a possibility that in case the interest cut is passed on to the common man, his EMI of the house would get reduced, which has become a lot burdensome for the common man.
The move will boost the consumer demand by bringing relief to the borrowers and industry, with the RBI reducing the benchmark repo rate, the rate at which it lends money to commercial banks. Home and auto loans are expected to get cheaper.
The way India is going, the way government is also taking proactive steps like Make in India and many other things, I think lesser interest rate would mean a lot for common man, for economy, for industry, for corporate sector. I think this would be a win-win thing for everybody.
In a statement today, RBI Governor Raghuram Rajan said that lower than expected inflation, weak crude prices and weak demand as the reasons for its move, as well as the government's commitment to sticking to a fiscal deficit target. These developments have provided headroom for a shift in the monetary policy stance, he added. RBI has even said that it could cut the interest rate further if the inflation continues to remain low.
RBI was of the opinion that inflation control should be given priority. RBI was putting its main focus on inflation control, because, and yes, up to a certain extent RBI was right also, because inflation control in a country like India matters a lot, because we have to see our common man, we have to see our BPL friends.
Speaking about the consumer sentiments in India, Jindal said that the main issue is the supply chain gap rather than the demand-supply gap.
There is not much of demand-supply gap of things in India. Main issue is of supply chain management. The main issue is how quickly, how properly, and without spoiling, how the things can reach a housewife's kitchen from the agriculturist field.
Powered by NNIS.